Okay, so we'll come back to Chapter 3, filing status, and we're going to review the 5 filing statuses. Then we're going to go into a little bit more detail on head of household because that's the most confusing and most easily abused filing status. And we'll talk about what filing status even does for you. So at the top of the 1040, right under your name and address there's 5 boxes to check for your filing status. So we'll learn how to determine the appropriate filing status and identify the conditions to meet in order to use each of the 5 filing statuses. Each filing status will have its own advantages and disadvantages, so we'll learn those. Okay, so your filing status determines whether you're required to file a tax return at all, as we learned in Chapter 1. It also determines how much your standard deduction is. It determines your tax rate. So if you remember the tax table, there are 4 columns. One for single, one for married filing joint, one for married filing separately, and one for head of household. You'll notice one is missing. Qualifying surviving spouse uses the same tax rates as married filing joint. And then many other deductions or credits are only available to certain filing statuses. Mostly, married filing separately is going to be locked out of a lot of different credits. Okay. So your filing status, because there's single and then there's married, either filing jointly or separately, it's obviously going to depend on your marital status at the end of the year. So it's always based on your marital status on the end of the year, December 31st. So if you got married today's September 16th, 2024, for the entire tax year 2024, you would be considered married. On the other hand, if you got divorced and your divorce was final today in September, then you would be considered single or unmarried for the entire tax year.
As long as they get divorced by January 1st.
By December 31st. Yeah. So you are considered unmarried for the whole year if you have never been married. That's the first one. If you were divorced under a final decree of divorce or separation by the last day of the year. And that has to be what's called a final decree. There's also something called an interlocutory decree, which means during the trial. So you could get a decree of separate maintenance while the divorce is still ongoing. That is not a final decree, so you would still be considered married for tax purposes under that. Okay. On the other hand, you're considered married the entire year if you were legally married before the end of the year. Or if you were satisfied the requirement to be married under the common law. And I believe there's now just 7 states that have common law marriages. And one of the rules, it's actually in the Constitution, if you're married in any state, you're married in every state. So if you, let's just double check this. Okay, so currently there are 1, 2, 3, 4, 5, 6, 7, 8. 8 states that allow common law marriage. And if you satisfy the requirements to be married under the common law in any one of these states, then you continue to be married even if you move to another state. Even if you and your spouse split up, if you never got divorced, you're still considered married. We've had some people, quite a few clients whose spouse maybe moved to another state or even to another country, but they never got divorced. So they're going to be stuck with married filing separately for the rest of their life. And You're also considered married if your spouse died during the year and you did not remarry. So this is one of the exceptions to looking at the last day of the year. If you're widowed during the year, you're still considered married the whole year. Once again, these are our 5 filing statuses: single, married filing jointly, married filing separately, head of household, and qualifying surviving spouse. Okay, so we'll go through each of those in order. Single is the most easy to understand. It's kind of the default for most taxpayers. If you're not married and you don't qualify for any other filing status, your filing status is single. If you're married, though, and you're married before the end of the year, or if your spouse died during the year, if you're married, you have to choose between married filing jointly or married filing separately. To file a joint return with your spouse, you and your spouse must both agree to file a joint return. And that means this tax return is going to need to be signed by both you and your spouse, and both you and your spouse agree to be held liable for any tax due on that tax return. So even if you've later divorced, if you file a 2024 return, you owe $10,000, and then you later divorce, and it's 6 years later, and that tax still hasn't been paid, IRS can come after either one of you for that tax due. And it's going to be usually whoever it's easier to get the money from. Once again, if your spouse dies during the year, you can still file one last married filing joint return. If your spouse died, let's say your spouse died in 2024 before the deadline for a 2023 return, so let's say March of this year, you can still file a 2023 joint return because they lived through the end of the year, but also because they died during 2024, you're also going to file a 2024 joint return with the same spouse, assuming you don't remarry. If you do remarry, then you can still file married filing joint with your new spouse, but your deceased spouse, their filing status is going to be stuck at married filing separately. Remember, the tax rules for decedents, whether you're required to file a return, are the same as for someone who survived during the year. So if your deceased spouse, their income was more than the standard deduction, $13,850, they'll be required to file a return, or even like anybody else who died during the year. If their income during the year was more than their standard deduction, they're required to file a return. Okay. One point that's important is you can file a joint return even if only one spouse has income. So maybe one of the two spouses makes $150,000 and the other one is a stay-at-home parent. You can still file a joint return, and it's usually advantageous to file married filing joint in that case. Okay, so both spouses must sign the return. If one spouse has passed away, then the surviving spouse can sign the return for their deceased spouse, or you can just write on the return filing as surviving spouse. There are some other situations where you can sign for your spouse. If your spouse is unable to sign due to illness or injury, the healthy spouse can sign the return for both spouses. Or if one spouse is stationed in a combat zone overseas in the military, then the stateside spouse can sign for both spouses.
But it has to be a combat zone.
Yeah, it has to be a combat zone. Right. Yeah, if they're just stationed in Germany and Germany is not a combat zone, then they still both have to sign the return. So you might have to ship the return off to them, or at least the signature page off to them, and try to get it back. Or you can also sign, in that case, with a power of attorney. You can't actually technically sign the return itself, but you can sign the authorization to allow an electronic return to be filed. The tax return, like if you're going to mail the tax return to the IRS, this signature block has to be in ink. So, but if you're going to electronically file, if you're going to send it to IRS by e-file, then that can be docu-signed or can be, so we could get someone's signature that way. But if it for some reason it has to be a physical signature, then it has to be a pen and ink signature. The alternative to married filing jointly is married filing separately. And this is you and your spouse don't agree to file a joint return, or maybe your spouse doesn't have all the information they need ready to file a tax return, but you are ready, so you just want to file your taxes and make sure they're on time. You do not require your spouse's permission to file a separate return. You're saying on a married filing separate return that you're only going to be responsible for your own tax. If your spouse ends up owing a bunch of taxes, then that's on them and you're not responsible for paying those taxes. So, so that's one reason people will choose married filing separate, is they don't want to be responsible for their own tax. However, married filing separately is generally less advantageous overall because you can't claim the standard deduction if your spouse claims itemized deductions. So either both have to itemize or both claim the standard. If you're married filing separately, you don't get the earned income credit. If you're married filing separately, you don't get adoption expense credit. You don't get child independent care credit. You can't deduct your student loan interest. You can't claim any education credits, such as the American Opportunity Credit. Capital loss deduction is half of what it would otherwise be, only $1,500. There's a lot of benefits that are just absolutely gone if your filing status is married filing separately. So, in general, if people ask, should we file jointly or should we file separately? The answer is going to be 99.5% of the time, married filing jointly is better. The main reasons you would want to file a separate return is you don't trust your spouse to do their taxes correctly, so you would just want to be responsible for only your own tax, but you'll end up probably getting a smaller refund or owing more in that case. Or your spouse doesn't have all the information. Maybe your spouse runs a small business and it takes them 6 to 8 months to gather their paperwork together, and you're just a W-2 earner and your return is really simple. So you just want to file your return, get your taxes done, and then later on your spouse can file their own return. So married filing separately, usually the tax is higher or the refunds are smaller. There is, when we talk about married filing jointly, married filing separately, we can also talk about amending a return. Amendments will be in their own chapter again, but when we talk about it now, you can change your filing status after you've already filed your return. If you file a joint return, remember when you file a joint return, both spouses have signed it, they both agree to be held liable for any mistakes on that tax return. You can't change that, you can't get out of that after the original due date of the return. So tax returns are due April 15th. If you file a joint 2024 return, you're stuck with joint as soon as the deadline passes, next April 15th. Before April 15th, you can go back and undo that, but you can't undo it after April 15th. On the other hand, you can change to married filing joint anytime up to 3 years after the original deadline. So that's another option that we have for cases where one spouse is ready and willing to file a tax return and the other spouse is not ready because they are still adding up their business expenses. So we could file separately for one spouse, and then later in the year, or maybe even a year or two later, we can amend that married filing separate return to a married filing joint return. So you can go from separate to joint for 3 years, but you can't go from joint to separate after the original due date. Community property states were not one of them. There's special rules for community property states, but we won't go into that because we're not affected by that.